Hello everyone, and welcome to this week's Motor Trade Radio podcast, powered by eBay Motors Group, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Welcome to this week's show. We've got another crazy week in terms of headlines. It's just not easing off at all, is it, Phil?
No. I mean, when we got the headline list through, I thought, and we've missed quite a few on this one.
Yeah. I had to cherry pick the ones to keep in and the ones to boot out. So we'll cover a lot of ground today. But you've had a busy week, haven't you? Because you were at the VRA conference running that, weren't you?
I have. Yeah, we had a great sort of event this week at the annual general meeting with the VRA, and I had to go through it officially. I had to stick to the script with that one, Curtis.
Unlike the podcast
and usual with me, but I did have to, because it's a legal requirement that I had to do the certain things for the AGM. But we soon got past that one, and we got onto the market discussion, and we had the opportunity of being joined by our friend of the podcast, Dale Wyatt, from Suzuki, Peter Smythe from Swansway, and just to keep a little bit of balance between them two and their views from an OEM and a dealer perspective on the world of EVs and agency. Although the agency, I think Dale and Peter were fairly aligned, as we've seen in the social space. Mike Jones, who you'll know from XAC, who's now doing some consulting. So that was a fantastic debate, and we did overrun, in fairness, as I kind of knew we would do. Jamie Yeh from Cap HPI, who you'll hear in the next couple of weeks, he joined us to give a quick market update. And then friend of the podcast, and we don't know what we're walking into with this week's Men-Able Moments, but Stephen Whitton. We had a session with Stephen Whitton from Men-Able, Rachel Clift from Ben, and Danielle from Compass, who do consulting and training within the wellbeing and mental health space. And we had a whole session on that, which was fantastic. Great debate, great content. It was a long day, but very, very, very useful. I think I was losing my voice by the end of the day. I think that was an event that I should have delegated some of the hosting, but I didn't realise until the night before of how big an event I was going to actually host. But it was good. I
mean, that really does sound like a great lineup. And I was going to ask you if EV and agency came up.
It was the topic. Yes, that were that was. I mean, even the panel discussion, I just had to stop at one point and say, okay, we've discussed agency a little bit more because we do need to talk about EV, and we did do. And so it was a fantastic event. Great. I mean, we had 65 people in person, plus a good volume online as well. So it was a great event. So a great debate. So it gives us lots to think about.
Excellent. And as you say, Steve Whitton is with us this week for his regular Men-Able moment. And also watch out for our weekday special episode. We haven't recorded it yet, and I'm looking forward to this one. It's our regular catch up with ICDP's Steve Young, and there is a lot to catch up on since our last chat a month or so ago. So that'll be on your podcast feed from the middle of the week, I suspect.
Yes, yeah. And the other things that, I mean, we haven't really spoke about this in great detail, and you picked this up, didn't you, Curtis, that we know that the consumer duty rules that come into effect on the 31st of this month, July, have a significant impact on the automotive sector. So anybody dealing with finance, whether that's Gap, finance sales, anything, this does have an impact. And I've been speaking to dealer groups, been speaking to financial institutes, etc. And it's quite a change of the way they need to operate, isn't it?
It is, yeah, because it's all about creating higher standards for consumers and improving competition across F&I, and that's a fundamental part of what dealers offer. So it is a major change. And just a shout out, because AM's coverage of consumer duties has actually been very good, and we'll put a link on the newsletter. But this week it did actually run some new research by Close Motor Finance on the levels of dealer awareness and how they've risen from 28% to 91%. So it's just showing how seriously dealers are treating this, and the realization of how this will impact their day-to-day business from the 31st of July.
Yeah, and say it's Curtis to say we'll put a link on the newsletter on Monday to the AM story that we're referring to here, which is covering some of this content from Close Brothers and others in this story. But it's quite handy because there is links to other content that they've covered on the subject of consumer duty. So we'll put that link in the newsletter. So if you're not up to date with it and you're not aware what's going on, there's a lot of output from people like iVendi, from Close Brothers, from Startline and others that are involved with consumer duty in financial stuff in general. So it's worth just touching base on. Have a look at that if you're not up to date with what is happening there.
Motor Trade Radio podcast, powered by eBay Motors Group.
Headlines this week from Car Dealer, Motor Trade News, Motor Trader, AM, and Auto Retail Network. Starting with Renault slashes huge number of car dealers as it radically downsizes network. Again, owners prefer to sell used cars to dealers than online buying services. Used EV values are set to stabilise in the second half of 2023, but interest in EVs drops as cost of living crisis and rising interest rates hit. Pendragon boss handed a very public to-do list covering carbon reduction, management diversity, and OEM expansion. And we've got an update on the latest job moves by industry bosses.
Just a few things happening then, Curtis.
Yeah, not much going on this week, is there?
No, and there is a few little sort of side stories as well with some of these that have been taking place, but we'll touch on them as and when we get to them. So, as Curtis has said there, and I like the little again at the end there, Curtis, which I'm sure you'll share your thoughts on that one. But car dealer there with as Curtis said, Renault slashes huge number of car dealers as it radically downsizes network. And this is saying that Renault confirms it has axed 29 dealers across the UK in a huge wake-up. The car maker has confirmed changes after disgruntled dealers leaked news to car dealer themselves. And Renault network partners handed 2-year termination notices. And I think it's not a surprise in many ways because they're not the first OEM to be doing that. In the UK and potentially across Europe. And we were talking before the show that I think quietly there's been a few sales taking place, a few of their Renault retail sites that have been sold. I think Virtue bought one fairly recently from Renault Retail Group. But as you said, this isn't the first time, is it?
It's not, no, and it's worth looking at the details behind this. And very much hats off to Car Dealer because they did run this as an exclusive on Friday morning. And from the content of the story, they clearly had tip-offs from some of the affected Renault dealers. But in the story, Renault actually confirm a lot of what's actually been said. So Renault confirmed they're cutting their network, UK network, from 144 to 115 sites, and it's already lost 9 sites this year. So it actually started the year with 153. So it just shows just how severe these cuts actually are. As you mentioned, 2-year termination notices have been issued. And also, tellingly, the number of dealer groups are being cut from 54 to 46 by 2025. And car dealer says many of the affected businesses are likely to be in Scotland, Northern Ireland and Middle England. And this, of course, follows moves by Mercedes and Jaguar Land Rover to reduce their dealer headcount, which we've been talking about on the podcast. But that's been very much on the back of agency, whereas this doesn't seem to be on the outset anything specifically to do with agency, because Renault has publicly said that it is sticking with the franchise model. Of course, it will be observing what happens with agency, and that may be reviewed at some stage. But we reported way back about the CEO Luca De Meo actually saying about how unattractive agency was to Renault because of things like the stocking costs and some of the inflexibility of fixed pricing versus demand, and not wanting to get involved in that world. But things change, so we'll see. But the reason I said at the outset, Renault culls network again, is because I reported on this back in 2011, if you can believe that.
Back in the day there, Curtis, yeah.
Back in the day, yeah. I remember being invited with a bunch of journalists to Renault's headquarters, and we were told that they were cutting the network by a third, and that equated to 55 dealers. So this was announced in 2011 and happened in 2012. So, and that was cutting the network from 190 down to 135 sites. So this isn't a new departure for Renault. They have got some form on this, although that time, it has to be said, a lot of the targets were some of the smaller owner-operator sites.
No, and you're right there. I think there's a spokesperson that did actually talk to car dealer that said it's in our first major change to Renault Group UK's dealer network since 2012, which aligns with what you're saying there, Curtis. We have adjusted our sales site coverage to ensure the best possible consistent experience for our customers, optimize our performance and provide a positive business relationship for our partners. Yeah. Did you write that one, Curtis? That's
No, that definitely wasn't one of mine.
But no, they're obviously alluding to the fact that they're doing it again. It's been some time since they've done it. Like you say, there's no mention of relevance towards agency, but we are seeing consolidation in general across the market, and obviously Renault are not going to be immune to that, so they'll have to do something. So yeah, I think again, you just feel sorry for the dealer network that are having to go through this, and suddenly to be told that you're being terminated and you've got a 2-year termination contract suddenly starts to change strategies that you may have already in place.
Yeah, definitely. I mean, they do say that the population will be within 45 minutes of a Renault site, but that is a sizable cull, and also at a time when Renault, the parent group, is forming some partnership with Geely, the Chinese manufacturer, to build hybrid engines over something like 17 factories over the next few years. So investing in old tech when the market is moving towards EV. So it's all a bit curious, this, isn't it?
Yeah, we kind of haven't covered that story this week because you kind of segued into it with this a little bit. But you're right. I think that's been a topic of conversation at many meetings this week since that news broke. And I think the UK has actually been cited as one of those locations for that, which kind of questions why invest in ICE hybrid engine plants at a time with this transition to EV. Now, clearly, there is still a demand in the global market for combustion engine and hybrid away from EV. Not every market is transitioning to the EV by 2030, 2035, 2040. But obviously, UK is by 2030. And we've also got the Wheels of Origin playing into it, and import-export tariffs playing into it. So it's created a big question out there. But I'm sure we'll cover that another day at some point. Maybe it's one for Steve next week, but we'll see.
We'll
play that
quiz
one.
him on that,
We will.
definitely.
But sticking with dealers and staying with car dealer, we've got some insight and results coming from eBay Motors Group on their panel. Now, motorists prefer to sell used cars to dealers than online buying services, this study has found. And this is that online car buying services still behind traditional dealers in eyes of vehicle owners. That eBay Motors Group finds that 62% of buyers expect to part exchange their current vehicle with a dealer. And despite that, over half, 57% of all buyers claim to get at least one type of online valuation. Now, again, we were talking before the show on this one. There's a view that consumers are wanting and going to these car buying services. When this finding clearly says that is not what they want, is it?
Yeah, and I did see the data because I helped with the guys with this release, and it is interesting, isn't it? Because there are 3 or 4 really high-profile online buying services, and you would expect them to be gaining more traction, but that's not actually what's shown in this particular release, because the customers, when asked, they prefer the convenience of transacting all in one place. They'll go online, they'll get a price. They may use an online buying service to get a price, so at least they know where the starting point is. But the research shows quite clearly that when it comes down to it, they would rather transact with dealers, which of course is great news for dealers, because it means that they have an opportunity of retaining more of those part exchanges, which otherwise they would be losing. They would be losing outside of the dealer network.
Yeah, and as you say there, I mean, over the years, I'd be a little bit contentious. There's a view that the dealer network has pushed the consumers into that marketplace because of, I'd hate to lose it, trying to nick the part exchange in many ways, or making it a very difficult process and transaction. But that's changed now, hasn't it? I mean, the dealers are giving good prices for part exchanges. They're out buying the cars. They need that stock. So whatever the perception was probably decades ago now, has changed. And as you say, the consumers, the study does say that, the consumers do prefer that more seamless transaction. It's easy for them. They want to drive into the dealership or have a home delivery and swap one car for the other car. Why wouldn't you want to do that rather than dealing with a third party? But I think there's, again, we've just got to get this process going right.
Definitely. And heading over to Motor Trade News for the next story, which is used EV values are set to stabilise in the second half of 2023. So this is based on research published by CAP HPI during the week. And it says that, that numerous battery electric vehicle models have now stabilised or appear close to actually plateauing, follow those substantial decreases in used values that we've certainly talked a lot about on the podcast over recent months with CAP HPI's Darren Martin. It goes on to say that a small number of EVs remain weak and appear to still have some way to fall, with no common denominator or central theme governing how individual ranges are performing, which again is something Darren alluded to. It's very much make and model. There's no rhyme or reason to it. And Tesla are down one month, they're up the next month. So there's a lot to play out in this, but it is encouraging news, isn't it?
Yeah, and I think Darren did mention it on one of the previous ones where the Tesla 3 had dropped at the start of the month and recovered higher by the end of the month, because it suddenly became, a good proposition as a used vehicle to the dealer network. And I've spoke to several retailers in the last week or so that are out actively buying used EVs. But they go in with their eyes wide open, do the research, manage them separately to the rest of their stock profile in terms of, search criteria and price movements, etc. So, there is some good propositions out there, and you have got price parity on some of these EVs now compared to combustion engine on some of them. So, but yeah, I think Dylan does point out that there is stabilisation, but it is still a volatile market. But there is opportunities there, as we see going out for the rest of the year. So I think it's going to be one to watch on the EV one. I think we're never going to be short of a story about EVs, are we, Curtis, for the podcast?
No, definitely not. No, and it's worth pointing out that Dylan's Setterfield in the story does actually say the used car market in July is expected to continue to be relatively robust, continuing along the lines of the overall strength seen so far in 2023. And we'll certainly have an update on that in a couple of weeks' time when we catch up with Jeremy Yeh from CAP HPI.
Definitely. And this does segue quite nicely into the next story in motortrader.com, that interest in EVs drops as cost of living crisis and rising interest rates hit. And this is some research from Just Services, isn't it, Curtis? That I think you might have been involved with some of this around their appetite in battery electric vehicles.
Yeah, so this is from the Judge Service State of the Nation research, which polls the views of, it's over 6,000 car owners. So it's a big piece of research, and it is found that over the last 12 months, so 12 months ago, 15% of owners said they expected their next purchase to be an EV. However, when polled a month or so ago, this dropped to just 9%, while owners who plan to stay with their EVs has also decreased year on year from 90% to 83%. So this isn't just first-time EV buyers, but it's also current owners. Within the piece, it goes on to say that hybrid buying intent has also cooled, dropping from 17% to 15%, while plug-in hybrids have increased marginally from 5 to 7%. And a lot of it is down to pricing. In a cost of living crisis, inflation rising, car buyers are thinking about price. They are being led by price, even if that means stepping back and staying in petrol or staying in diesel.
And I think we touched on this a little bit, didn't we, when we had sight of the new car registration performance results for the month of June and year to date, that there's a lot of call now from industry associations and other commentators that trying to get consumer incentives in place to transition into EV. The fleet owner, the fleet customer, the opt-out customer get the benefit in kind. There are taxation benefits for both the company and the driver, but there's nothing in place for that private customer, private individual to transition to a battery electric vehicle. And costs of ownership, costs of purchase become all part of that decision. So at a time, like you say, Curtis, this cost of living, yes, energy prices are easing, and the views are that we're not going to face the same challenges the winter of this year as we did last year. But it's that perception of that cost of ownership, isn't it? That why should I transition into an EV when there's still the charging infrastructure, destination, home charging challenges in place, and I'm paying more money for this vehicle. So there's a little bit of work to do there, isn't there, I think?
You're listening to all the chatter that matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed. Next up is our latest Menable Moment, looking at mental health and wellbeing awareness, issues and best practices across the automotive sector, with me, Stephen Whitton. Yeah, hi everyone, Menable Moments time again. Hope you're well. This week is a load of shout-outs. I bet you wondered what I was going to say there, didn't you? So it is genuinely a load of shout outs. And I want to start with Phil, because Phil, you're an absolute star. You've got Menable involved in the VRA, the Vehicle Remarketing Association. And it's been a great opportunity for us to meet with some awesome people there. And at the AGM and meeting this week, as you know, Phil, of course, I sat on a panel with Rachel from Ben and Danielle from Compass, and we talked about mental health and mental wealth and well-being across the industry. And I'm going to come back to that as well. But also at that meeting was Peter Smythe and Dale Wyatt, who were two of the key speakers. And Peter came up to me at the beginning of that session and said it was good to meet me, and he listens to the podcast every week, and he also listens to the Menable Moments sections as well. Now, he didn't say he likes it, but then I kind of took it as read that he listens to it, so he's obviously taking something from it. And Dale, of course, has been my mentor for the last 7 or 8 months, and he is an absolute star. He is just amazing. He's just such an awesome guy, and he's really, really helped to get us going in the right direction. So massive shout out to Dale as well. But one of the key things that came out of the panel discussion was actually backed up by the survey that the VRA sent out to all of its members. There was over a 60% response rate. And within that, a good number of the managers said that at any one time, they're actually feeling pretty okay and they're doing all right. But you have to temper that with the fact that they were managers and leaders that were answering the questions. And most of them are working for organisations that are already doing a huge amount towards mental wealth and well-being in their organisations. However, interestingly, over 26% of the responders said that they don't have anyone to go to in the workplace in the event that they're feeling down or can't cope or have got issues. And that's what I wanted to come on to, really, because I think what we're doing and what we've got and what we're seeing is a massive amount of impact that's happening around the industry. There's lots of little pockets of great work that's going on, but we still have a lot to do in terms of communicating the message and getting everyone aware that, culturally, we need to set this thing up so that it becomes okay to not be okay. In other words, create psychological safety in your business. So my issues way back were really related to the fact that I had no one in the business to go to. I couldn't open up and be honest with anyone that I worked with. And that was because I largely worked in organisations where it wasn't psychologically safe to do that. I feared the repercussions. I feared the consequences. I feared being judged. Most of which, to be fair, was actually in my head. It wasn't the reality. But nonetheless, that's how I felt. And when you're overwhelmed and you've got stuff going on, you ain't going to see it any other way. So the only way round that is for everyone as leaders, influencers, gurus, whatever you want to call yourself, to set a psychologically safe space up within the workplace that says it's okay for people to reach out and it's okay to not be okay. So, you know how to get hold of me, stephen.whitton@menable.org. We are on a roll now with Wellbeing Winners. I'm being more intentional than I've ever been with that. Again, massive shout out to eBay Motors Group for sponsoring us on that. They're absolute stars. And we want to get out to as many dealers as possible. And that's why we're offering a discount for eBay Motors customers. And we're also offering to do 4 free initial assessments for those smaller businesses where you have less than 10 employees and you perhaps don't have access to the well-being kind of stuff that we've been talking about. So have a great weekend. You know how to get hold of us, and menable.org is the website. I'm all over LinkedIn apparently, and we will catch up again soon. Take care.
Well, many thanks for that, Steve. Some great observations there on why it's okay not to be okay, and also how Menable can help you and your business to actually address that.
Yes, yeah. I mean, he cited some of the conversations from the event this week, and it is, you have to be very careful that you start talking about training, you start talking about surveys and things like that. But it's what came clearly from the panel discussion with Rachel, Danielle, and Stephen was that this is about a cultural change within that mental health and wellbeing state. It's not about attending a course, getting yourself a certificate, or ticking a box as a industry leader saying, you know, we are involved and we've done this, we've done that. It's culture. It's business culture, right down to your administrator, your forecourt, realtor, whoever, all the way through the business. And that was the clear message that came out from this week. So great work continually from Stephen there with what he's doing and with his work with eBay Motors. And I know we're going to try and do a podcast at some point in the coming weeks and months with Rachel, with Stephen, and with Danielle to sort of dig into some of the results and findings of the survey in a little bit more detail. So we'll keep you up to date with that as it develops.
Meanwhile, back to the news. So heading over to AM Online, and I was fascinated
yes,
by
never
this
seen
story,
this
as indeed you were as well, I know. So the headline there is Pendragon boss gets new targets for carbon reduction, management diversity, and OEM expansion. Now, you and I were talking about this, Phil. We don't recall a time when a leader of a business, certainly a dealer group, has actually been targeted so publicly with, this is what you need to do over the next 3 years, and this is also how you'll be rewarded. And this story actually goes into it. So the targets are reducing Pendragon's carbon emissions by 5%, increasing female representation in management positions, and bringing at least 2 new OEMs on board within 3 years. So what do you make of this one?
I'm not sure.
Yeah.
No, I think, as you say, I mean, every business has their goals and values and targets and things like this. And, you know, Bill at Pendragon has obviously set those out previously into where they're taking the business. But and I get it, I understand some of the targets in terms of the direction and what's there to be achieved. But as you say, for this to be to Bill and his leadership team and to be publicly announced and to share the financial rewards on achieving the targets, I've never seen it before.
No.
But I get it, I say, and it's great. It's great that this is, because I think, you know, publicly, for it to be seen that, you know, these leaders are being given targets that are based around diversity and sustainability, etc., is great. Let's not kid ourselves. You know, to share this kind of transparency publicly is fantastic news. It's just something that we've not seen before.
No, and the level of transparency is actually very revealing. So it's very much geared towards, as you say, the chief executive Bill Berman and also chief financial officer Mark Willis. So the AM story actually says that the incentive plan, if the targets are actually smashed, would actually grant Bill Berman 4.6 million free Pendragon shares worth £815,000. That's based at the current price. And for Mark Willis, 2.5 million shares worth £448,000. So, and as you say, it's not bad. It's not bad. They've got three years in which to do that. But as you say, Phil, chief execs, senior managers all have their targets, but it's usually behind the scenes. It's not as open as this, and there is much more in the story. So if you do actually want to learn more about how they will be rewarded and what the targets actually entail, then do check out the AM coverage.
Yeah, and just to put a bit of context to this, that's I think market value at the minute is floating around sort of 17, 18, 19 pence a share. I think the last approach by Heading, when they tried buying Pendragon recently, was a market cap of about 33 per share. So that won't be too bad, will it?
No.
You'd take that, wouldn't you, Curtis? You'd have that?
Yes, definitely,
You got
yeah.
some big targets to hit, don't get me wrong.
Yeah, I
But,
mean, we have targets on the Motor Trade Radio
we
podcast
do.
as well, don't we,
We do.
Phil?
Yeah, no, yeah. Where are my shares, Curtis? Anyway, moving on, but sticking with people news and going over to auto retail agenda and saying hi to Tristan and Francis at Auto Retail. I had a chance to catch up with those guys this week, and the story is about Martin Casher has quit Pendragon to join Marshalls as to take the CEO role, which has been vacant since Dash's departure a year ago.
Yeah, and this is the one of the stories, one of the headlines we've actually been waiting for because, as you say, Dash left Marshalls just over 12 months ago now, and he was celebrating his first anniversary quite publicly on social media. But yeah, it's taken an awful long time to announce and appoint his successor. So, as you say, his successor is Martin Kasher, who currently is the Chief Operating Officer at Pendragon. And he actually stays in position until November, which is when he takes up the new role at Marshalls.
Yeah, and I mean, again, that's fairly unique, isn't it? The announcement has been published, but he remains in the role at Pendragon
Yeah.
until
Yes.
taking the new role that's been announced. But obviously, there's been a lot of things going on, which is obviously where some of that previous story has been picked up from in terms of recent stock exchange statements, etc., coming out of Pendragon, and what's been happening. That there was a revolt, as Auto Trade Retail have named it a week ago, with when only 59.8% voted to re-elect Martin Casher to the Pendragon board, and fractionally better than the CEO Bill Berman that we've been talking about, who received 58.1%. And it says that the departure also follows Pendragon's chairman Ian Philby, who last month announced he was going to step down after less than 2 years in the role. So a lot going on in that Pendragon leadership team at the minute, which could be, one of the reasons for those targets in place. But yeah, interesting times ahead, I think, in general.
Definitely. And more people news heading over to Motor Trade. The headline is CarWow founder James Hind steps down as CEO. So this is news that James Hind, who's of course is the co-founder of CarWow, is stepping down as CEO after, I find this hard to believe, 14 years in
Yes,
the
I
role.
know. We've been
Because,
talking about this. Yeah.
because you and I remember when
Yeah.
CarWow was launched,
Yeah.
and I certainly remember having very early conversations with friend of the podcast, Mike Allen, who was certainly heavily involved in those early days with setting up the business, advising James, and James launched the business with, I think it was 2 other university friends, and it did literally operate out of his bedroom, the back bedroom, just outside of Liverpool. I think it's one of the suburbs of Liverpool, and transforming it into this mega business now.
Yeah, I mean it's fantastic, isn't it? And they obviously there's a bit of a change in terms of management with James stepping back. 'Cause I know he's still involved as I think non-exec role that he's still got there, and I think he's recently become a father as well. He is fairly young compared to me and you, Curtis. I mean, he's not bad. He's done well, hasn't he?
He's done very
He's
well,
done very well,
yes.
hasn't he? But carwow, they talk about, which has raised $157 million from its investors, has 3.5 million monthly users, 8 million subscribers on the YouTube channel, and offices in UK, Germany, Spain, and Portugal, and employing 370 people. Now, there is a view that maybe this change is come at the same time as the business maybe sort of redirecting itself. We know that there's how does carwow work in the world of agency? with transparency and fixed pricing across agency, which isn't necessarily what the carwow model is. They are getting more involved with the used vehicle marketplace, and I think the story does allude to, interestingly enough, back to your story earlier, Curtis, with
Yeah,
the
online
findings from
buying.
eBay, online
Yeah,
buying.
sell my car.
Yeah, they've launched Sell My Car service where the customers can list their cars for sale to their dealer network. So it seems that there's a redirection or a change of strategy for carwow at the same time as James stepping back from
Yeah,
leading the
and
business.
as you say, James will be an executive director, while current chief operating officer John Weichman will become CEO. And before joining Carwow, Weichman was chief marketing officer at online luxury fashion retail platform Tech.
He also spent time at Dell, Apple, Skype, and Expedia. So in terms of that online e-commerce fintech space, he's doing very well, and he's got that experience, hasn't he?
Yeah, definitely. And moving on to the last people story of the week, and it's with AM Online, and the headline is ex-Ford Europe president joins the board of Inchcape. So this is news that Stuart Rowley, a name that will be familiar to a lot of listeners as former chair and president of Ford of Europe, as well as more recently, Chief Transformation and Quality Officer for Ford, is taking on a role at Inchcape.
Yeah, and as you say there, I mean, his name is synonymous across the sector. Stuart Rowley there, but he'd been a little bit quiet recently, and I think we were chatting again before the podcast, Curtis, where has he been? But he did take a different role within Ford, didn't he, in that time? But yeah, I mean, a good move there for Inchcape. I mean, he's obviously going to bring a significant experience in terms of understanding of that global automotive business that he has within his career at Ford, and what that means to Inchcape. And I think Nigel Stein, who's Inchcape chairman, has said that Stuart's extensive global automotive experience will bring an informed perspective on the industry and will strengthen the skill set of the existing board. So, very much a high-level, board-level strategic move there, bringing Stuart into the business.
Yeah, the interesting move, and Inchcape, obviously an interesting company to keep tabs on because of obviously what they're doing in the UK in terms of as a dealer group, as a retailer, but also across Europe as a distributor, because they're working very closely in some markets with BYD. So some interesting developments there at Inchcape.
Definitely. So hopefully there's a lot of stories there this week, Curtis, and they will all be on the news feed on Monday. So if you wanted to dig into any of those stories in a little bit more detail, then please do. If you haven't subscribed already, subscribe to the newsletter from the Motor Trade Radio podcast on LinkedIn. And every Monday morning you'll receive a link to this recording again, but along with all the headlines and links to those headlines across the medias that we've selected this week.
But that is all we've got time for now, Phil. So,
it is.
Yeah, it is. This is a wrap. So many thanks for joining us on the Motor Trade Radio podcast. We're back during the week for our big picture look at OEM and dealer trends with industry guru Steve Young. Until then, it's goodbye from me.
And it's goodbye from him.
You've been listening to Motor Trade Radio Podcast, powered by eBay Motors Group. We'll be sharing all the links from this week's headlines on Monday morning. So to make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.